station of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Happy Christmas week to everyone. Happy holidays to everybody. And let's get started with our show. We're going to take a look here at the German DAX like we always do. And as you can see, it's still grinding up higher. We've been in one of the narrowest trading ranges of the year, as we're seeing also with our S&P has been up and down in the same range for 7 straight days. But there's a statistic that I think you'd be interested in. Since November the 4th, the Dow Jones has not had 2 down days back-to-back. Now, we're going to give everybody here at TFNN a chance to fill their Christmas stocking by going back into history and find out how many times that has happened before. So go back and look over a 7-week period and find out how many times the Dow has only been down 2 days in a row. In other words, it's never been down 2 days. It's only had 1 down day during this whole thing. So just go back and look. I will give you a hint. Don't go past 1875 because we don't have very good data up until 10 years after the Civil War. But you're going to be busy all through Christmas and New Year's. Okay, let's take a look at the next one. We had a request to take a look at a market that we don't see very often, and that is the natural gas market. And if you'll give me, and if anybody is qualified to talk about this market, it has to be me. Hold on one second and we'll get it up here so you can take a look at it. It's got a lot of technical things that look really interesting here. If you'll notice on this natural gas, we had this big run up during the, I guess this was a Trump bump also, but we got up to the 377 level, and now we backed off to a 382 retracement of that level, and it's taken 10 days to do it. And if you look closely, you'll see that we're right at that same high that we had, back in October. So there are several things here that tell us that this 382 in the natural gas could be very, very strong support. However, if we get below the, 333 level, that would tell us that this most probably is not working. So the risk on this is rather small, but the technical picture is really, really good. Now, as all of you know, all of you know that the market for the U.S. dollar is extremely strong right now. The dollar index is up near the 104 level. The euro is breaking down, of course, again below the 104 level, approaching that 103 level. So it's very hard for any of these metals or just about any of the commodities, to look very strong. However, we have one that looks very strong. Let me just take a quick look here so that we can watch it and we'll see it from the point of view of the longer-term charts. This is the crude oil, folks. This is where we were. This is a 4-hour chart. As you can see, we had that breakout that Sunday night, went up to the 1.27 of the high from October. It was also the 1.618 from the high in early December. That was right at 54.40. We broke down and we stopped exactly at the 382 level. It took several days to get down to there. You'll also know that if you'll notice the higher bottoms that we've had, that's basically a 135 pattern. Now, this was just a few days ago. So what we want to do now is we want to see what's happening, to crude oil since that time to get us a better idea of maybe we can see something a little more clear. So let's just pull it up here and look at this same chart over from where we are right now. And as you can see, you'll notice that we also have another one of those little 135 patterns over the last couple of days. And the retracement of the last one is only exactly at the 382. That came in at the 51.50 level. And now we're approaching taking out the high of that right shoulder. And if we get above that, you've got a real chance of this market taking off. And you have to be impressed with it because it's one of the few commodities that is going up with the U.S. dollar being as strong that it is. So there's another reason, to take a look at this crude oil. And also the fact that we've had some pretty cold weather, but that cold weather is passing. I mean, you can see from the weather reports that there's a lot of rain coming across, and with the rain comes warmer weather, and it's going to be into the 70s in some parts of the east over the next few days. And so watch this very, very closely, because if we get out of this level and get above that 54, if you remember when we had our good friend Bill Meridian on from Vienna, Austria, our oil expert and astrology expert and devil may care raconteur, he told us that he thought that crude was going to go to $64 a barrel sometime in 2017. So that would line that up very, very nicely, with that. So keep in mind this crude oil, because if we get close above this $54 a barrel level, it should be pretty much of a pretty good move to $64 a barrel. That's nothing more than the big ABCD, and be able to see it. Duffy, I don't remember if he said gold would drop to 700 or not. All I remember him saying that he thought there would be some good support around $1,100. That's what I remember. I will ask Bill today after the show. I'll Skype him and see if he has any information on it. So we'll watch it from that level. Since we're talking about the gold, we want to take a quick look at it here, because we're almost down to the 78% retracement this morning, with the dollar being so strong. As you can see from this long-term chart going back over the last couple of years, after we had that big three-drive pattern in December of last year, we are the 78% retracement on this comes in at 786, and as you can see, we've been straight down, since the election. It's been 1, 2, 3, 4, 5, 6 weeks, straight down after we had the election night rally, where we rallied almost $110 over a period of 5 weeks, and then gave it all back in a matter of a few hours on the night of November 8th. So we'll watch very, very closely, how this is going to unfold. Okay, now the next one we want to take a look at is the silver market. Silver looked like for a few days last week that it was going to be stronger than gold, but now it's giving up the ghost. And if we look at this, you're going to see that we have a pretty strong 78.6 level retracement coming in at 15.45 an ounce. That's also the 1.618 expansion over the last 2 weeks. So 15.45 would be what I'd be looking at in the silver as far as a good spot for some support, if there is such a thing as some support, given the environment of such a very strong U.S. dollar that we're seeing this morning. And we're watching it across the board with the yen and the Canadian and everything else too. So there is no indication that's going to stop yet. There is some resistance up here at this 104 and change in the dollar index that we've seen before. But remember, that is a relatively short-term index. If you'll notice, you'll see that it's right at the 1.27 level, and we're almost there right now. We're trading right above that 103.50 level, so it's right in the ballpark of this expansion. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we posted the chart of the platinum, and as you can see, it's made the 78% retracement last week. We're also holding above that right now by a hair. A very thin thread or a very thin hair, but we could be close to some major points here in the gold and the silver and the platinum. However, it will have to be somewhat dependent upon the U.S. dollar turning, because these have such a strong correlation to this that it's really quite interesting. I had an interesting question last night by email about the what was it like at Drexel during the Christmas holidays? Well, it was really spectacular, actually. I was there for 6 years, from 76 to 82, and we would have a giant Christmas tree in the lobby. And of course, most of there were 23 brokers in the retail side, of which I was part of that, and we had of the 23, there were only 4 non-Jews. We were called Goyas, which means a non-Jew in the Hebrew faith, which was always a lot of fun. But the other folks were all Jewish, and we had Hanukkah. And of course, Hanukkah comes on Christmas Eve this year, so we had double holidays. I mean, Christmas, even though it was not a Jewish holiday, was just as big at Drexel as it was any place else. So it was really spectacular. One of my fondest memories, and I have a lot of them, of course, a lot of them at Christmas time, but this was a daily memory. You guys don't know this, but Mike Milken, the only person I've ever met more than my mother that liked popcorn more than me was Mike Milken. He had one of these old-time popcorn machines on the second floor. His operation was second, third, and fourth floor of the building. And on the second floor, right outside the elevator, was a fellow that worked every day making popcorn for everybody. And there were, giving the whole operation, there were about 200 people in the building. And every morning around 9 o'clock, the popcorn machine would be working. And my secretary, Connie, would go up, pick up my popcorn and bring it down. You were not allowed to go up in the elevators unless you had an invitation. Even if you were a broker for Drexel, you could not go up that elevator. They had pretty strict guards there. And also, Mike came in every morning in a one of these motor homes, but it was all he was a little paranoid. He had it was all armor plated. and it was followed by his security detail, which was in a black limousine right behind it. And these guys were all ex special ops guys, so it was really an unusual time of the year. Anyway, it was fun. Drexel was very, very big on charity. They recommended, we all made pretty good money, so they all recommended that, we donate to charity. And if you didn't put your share in, believe me, they told you about it, right up front. But there were only a few people that ever didn't really do that. So anytime somebody needed something, they were there. Drexel operated under the principle of not money, but their principle was basically making goodwill. And they expected that if you did something good for somebody else someday, it would come back to them. This was from going back to the days of Tubby Burnham's father and the Rothschilds and all that stuff. But they were very, very instrumental in that. They knew how to get things done. If you wanted something done, somebody at Drexel, one of the directors or one of the customers, could get it done for you. That was just the way it is. There was not money changing hands, but if you gave your word to somebody, that was it, and it was done and over and out. So it would be one of the great firms of all time if they hadn't got involved with all the shenanigans. And of course, shenanigans is what drops everyone, but the insider trading was part of it. The greed, everybody can understand that. We can see what's going on Wall Street now, but the greed was not the problem. The greed was the secondary to what happened with the insider trading and all the other stuff that went on. But it was a fun time. I've been doing this stuff for over 55 years. Those 6 years have to be some of my best as far as having a lot of fun and meeting some wonderful people. In fact, Twentyman and I were talking last night, and it was really amazing that we're the only two left. I mean, there's just none of the other people are left because we started in our 40s, and everybody in the firm was in their 50s and 60s. So there's a few of Milken's group, but none of the downstairs group are alive anymore. So it's all days past and gone. Okay, let's move on to some of the other markets that we've got going on here today. We've got a very slow market, as you can imagine, because of the holidays, and it's going to get less and less as we get closer to Christmas. I don't even know why they're going to be open on Friday, but they are, so we'll see. I think they are. I think the stocks are open on Friday because, yes, they have to be open on Friday because it's in the Constitution that we should not be closed for 4 straight days. The only time we've done that is a few times. We did that during the war in in World War I, also World War II, right after Pearl Harbor, we were closed for several days. And of course, 9/11, we were closed for, I believe, 8 trading days, which was the longest period that we'd ever been closed. So we will be, there'll be an opening, of course. And right after the first of the year, things will be normal. And normally, we have the January effect, which means that the small cap stocks have a tendency to gain on the big cap stocks. So we'll see if that's the case. Mr. Bill, I believe it was closed for several days during World War I, but that was before my time. But I remember from studying history, I believe that it was closed for about 4 or 5 days when we entered World War I, but I'm not absolutely sure. Duffy, I don't know if the January effect has already occurred or not. It certainly has gone up, a great deal. But remember, this was an outlier event because it caught the market by surprise. No one thought that the Republican candidate had any chance at all of making it to the White House, and of course he's actually done that. And what he's trying to do now is to mend the fences on both sides of the thing. I think if he finally calls Rosie O'Donnell and starts to talk to her, we'll know that there's going to be peace on earth and goodwill towards men. But frankly, I'm not sure he's going to do that. But we'll have to wait and see. Duffy, you're asking a question. Is it if the IWM is at a peak? All I can do is tell you that it's got the same pattern in the IWM that we're seeing in everything else, and that's this big expanding triangle pattern that we see everywhere in just about everything. In fact, it's been the strongest of all of these up until the last few days. So we'll see how this all works out. But okay, we've talked about the gold, we've talked about the silver. I still think the Treasury bonds have a chance, even though they're hanging on by a thread. The thread is literally getting weaker and weaker each day because we're not getting much of a rally. As you can see from this long-term chart on the bonds, we have a lot of support at that 147.04 level. We've rallied $1,500 twice off of that bottom, but whether it's going to hold or not, remains to be seen because, it is a pretty significant bottom, and we'll see if it able to do that. We really need to stay above the 147.04 for the bonds, to have a chance. I think the interesting one, given all the news and everything, is the fact that crude oil really has a chance to get out of here because we're approaching the highs of 3 days ago after a 382. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the live cattle market. As you can see here, we had this big ABCD 3-drive pattern on the bottom. We had Rich Anderson on the line from Anderson Capital Management when that was happening, and he was mentioning that this 97 level in the cattle was going to be very, very strong support because it was supposedly near the cost of production in live cattle at that time. And of course, that depends on a lot of factors. And of course, feed prices are coming down a bit in the corn and other things. So this would have been changing a little bit. As you can see now, the cattle are approaching the highs that it made last June up at this 116 level. What I'd like to show you now is a similar chart, of course, but this is with the little piggies. We're going to take a look here at the live hogs. I know a lot of you folks don't trade live hogs, but we have some people in here that do, especially Mr. Z. If you'll notice here that we have this beautiful ABCD structure coming in at the 78% level. What's interesting now about the hogs is over the last 2 days, we've seen a drop in open interest. And when prices are rising and open interest is dropping, that's a sign of weakness in the market. Now, whether this is going to be a top or not in the April hogs, you'll have to wait and see, because we're trading at around close to 69 in the April hogs. And if we get above 70.50, this would certainly tell us that this is certainly going to go a lot higher. It doesn't mean it's a new bull market. It just means that this pattern would have failed. So we have everything completed here in the April hog pattern. But in fact, we'll have to wait and see if the market is going to acquiesce and say, yes, it looks like I'm going to have a correction. So we'll see what's happened. We've gone from 55 in the hogs all the way up to 69. That's a 14-cent move, which is a pretty big move. It equals almost what happened in the down move between, June and October, when they dropped 16 cents. So keep an eye on this, because the open interest are really looking at other things. We have a question from Tony in San Jose. Why are you using the Russell 2000 or other indices? I use basically 5 indices to look at the market. The first one, of course, is the New York Stock Exchange Index. That's the broadest. Then I look at the NASDAQ Composite and the S&P 500, both of those equally. And then I also, watch the Russell. I use the IWM, which is the ETF, because that's really heavily traded. And then finally, I take a look at the Dow Jones. And I use the Dow Jones lastly, even though that's the one that's most talked about in the news, because it's not cap weighted. It's based on price, and the price of Intel, which is very, very cheap, gets the doesn't get the same weighting that you get with Goldman Sachs, that is the most highly priced. So even though Intel might have a greater capitalization, be worth more on a dollar basis, it still doesn't get the thing. So that's what's wrong. And the problem arises because the Dow Jones family, they're the ones that decided how these things were going to be done. The people at the exchanges tried to tell them that, look, these should be cap weighted and not price weighted, but they don't count votes over there. They weigh them, and the weight was with the family of Dow Jones, and that's why it's the way that it is, the way that it's working. So keep in mind that that's why I watch these different indices. The one that I trade the most, of course, is the E-mini S&P 500, but we'll see if that's going to be the case, and we'll see what's going to be working with that. So anyway, we'll if you have any questions on these, by the way, don't fail to give us a call here, because we'll be trying to answer them for you if we can. But when you're trading the indices, you should pick one or two that you're comfortable with, and that's what you really ought to stick with. Now, we've been watching the Hang Seng in the Chinese market for quite some time, and last night we broke down below. We hit 21,700 and change in the Hang Seng. It keeps dropping and dropping. That tells us that the pattern of this ABCD after this 2-week rally is going to tell us, actually it was a whole month rally, is going to tell us that we're most probably heading towards 20,000 in the Hang Seng Index, which is down another 8 or 9%. Now, whether that's going to occur or not, we'll have to wait and see. We'll do one thing at a time, but that's what it looks like at the present time. We have a couple questions about the grain markets and stuff like that. There is a chance for I really think there's a really good chance for wheat to come down about another 10 or 15%, 10 or 15 cents lower. Looking at March wheat, if we could get March wheat down to that 385 level, it looks like it would be a pretty good thing. Question arises: if oil moves up, would this help the indices? I don't think indices need any help. They've been going up forever, so that probably would help, because everybody will think that the oil is going to be signs of robust economy. I think you're starting to see people changing their minds a little bit about some of the things that the president-elect is trying to put through. This in itself would be some good things, just getting with some of the regulations and some of the things, that are occurring. Some of them will be good. Some of them will be viewed as not being good. But overall, I think the less regulation you have, the better off you are as far as some of the things that we're watching. I just wanted to show you, this euro has broken down. We had a little bit of a chance last night at that double bottom at that 103.70 level, but frankly, that gave that up. And so it's going to have to reverse from this level. Whether it can do that or not, we'll have to wait and see if that's going to be the case. We've got a little bit. In fact, we broke below. Getting back to the wheat, we broke below $4 a bushel in the wheat. So that's a sign that we are heading down in some of these things in the grains. We just made a 78% retracement in the gold from the low that we made just about earlier last week. At that, actually it was on the 15th, late last week. We're right at that 78% retracement now at 1128. But remember, the 78% retracement on the long-term weekly gold chart comes in at 1117 to 1115, depending upon which data source you're using. And remember, we went up from December to June, and we're coming down June to December. So it's been 6 months up and 6 months down. And that was one of the things that W.D. Gant always liked to focus on, was equal up, equal down. So whether that's going to be the case or not, we'll have to wait to be seen and see if that's going to be the case. By the way, if those of you that ever go in and study some of the things that happened in the past, looking at the history of the market, you're going to run into a name called Roger Babson. There's a university there in Massachusetts, the Babson Institute, and then Babson University. He was equivalent to I would guess Warren Buffett during the 1920s and 30s. He was a very, very smart fellow, and he was warning, of course, of the coming collapse of the stock market, but he was warning everybody all during July, August. It wasn't until September the 3rd that it finally happened, but he was warning people about that. So keep in mind that there's a lot of soothsayers out there, and sometimes a sooth is good, and sometimes a sooth is no good. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're going to take a quick look at cattle on a little bit longer time frame here. You'll notice here that we were looking at the other high from August. We're testing that level. We could very easily get up to the 120 level. You notice that the first retracement was a 61% retracement off of the 3 drives to a bottom. The secondary retracement was exactly 382. The amount of the retracement in both of those swings, in other words, from the BC swings, in both of those were exactly equal. Basically, we were looking at a total of $6 in cattle, both of those, and now we have a potential to get up at this level that will be very, very interesting. So keep in mind that this is what we're looking at here in the cattle, possibly for a longer term if we get above that 116 level, and we'll see if it will hold, above that level. Looking at some other charts that should be very interesting here, and that is that we should be watching. Hold it 1 second here. I'm trying to get the chart up, and we'll be able to look at it here. And I'm a little bit slower than I am because of the Christmas holidays. I wanted to, since there's so many people eating sweets and stuff for the holidays, you'll notice that we've broken down badly in sugar. We should have held that 382 retracement. We were able to hold it for about a week, and then, of course, we broke it down. But what's important is you'll notice that the high up there in sugar that occurred in September was a exact, 1.618 expansion of the previous swing going back to 2014. Again, we're seeing the importance of that, 1.618 level that we're still watching in some of these other indices that we have. I personally, the question has been posed as whether the 20,000 means anything in the Dow. Folks, I don't think so, because if you look at any of the other numbers, 10, 11, 12, 13, 14, 15, none of them have been, of any significance. I don't know whether 20,000 would be any difference in that at all. So that's basically what you're looking at when you're watching these things, but it's not very far away. I think it's only about 50 points away in that to keep an eye on it. So those are the ones that I would be watching more than anything else. The S&P, we had the old high up there at 2273. I don't think that's going to mean very much, but we've been in this really tight up and down trading range for 6 or 7 days. We've had a heck of a run. As I mentioned earlier, since November 4th, the Dow hasn't had 2 down days in a row. And go back and prove to yourself how many times that has happened. And you'll be surprised how long it's going to take you to find it. Okay, we'll keep an eye on that as we move in towards the holidays. I've already talked about the Hang Seng. We're seeing the same thing happen in the Chinese market, where it appears to be wanting to go a lot lower. It basically was unchanged a little bit, and that's last night. But it already took out the double bottom from election night on November the 8th. So this gives you an ABCD structure in the Chinese market, also down another 5% before it should find, some major support. So there's only the DAX is doing okay. The European markets are holding their own all right, but really what we're looking at here is the U.S. has been the leader here, and I think part of it has to be attributed to the strength, in the U.S. dollar. Remember, when people buy stuff from the, in stock, U.S. stocks, foreigners, they have to pay up for it because the U.S. dollar is very strong, and they're changing a cheaper currency like the pound and the euro into dollars in order to buy it. So they have to have strong incentive, to come in and buy these things. So this is another reason why we're having such of a heck of a move here that's surprised everybody. And that's the main thing. We've had a question here about the euro on a longer term time frame. I just wanted to show you, this is the one that we posted last week. And this is where we're looking at a market in the euro that could get really close to par here. This is the daily chart. That also corresponds to that long-term weekly chart that we've seen over the past few months that we've been following, where it says the euro should get to par. Oh, someone's asked a question: did we change, or did we give Christmas gifts when we were at Drexel? No, Drexel was not in. They did not like exchanging gifts. You could have, of course, if you wanted to, but they did like for you to have gifts for the poor and the people that were very unfortunate. They did this. They were very quiet about it, folks. No one knew how philanthropic they really were, because anytime something happened, an earthquake or something, Drexel was flat out there, and they gave, and they requested because we made good money. I mean, hell, you can't spend it anyway. But they were really strong about sharing the wealth. And anytime they had a chance, I mean, I could think of stories that, one or two particular brokers would come out and, give 30 or 40 grand to buy a house for somebody that had a problem. I mean, we saw that, more often than that. So, but anyway, those were just things. But that was just Christmas time stuff. We'll move on. The fun part of it was both Hanukkah and Christmas. And not only that, but you had all the bar mitzvahs and bat mitzvahs during the year when, the Jewish children became going to 13 years of age. And those were the most wonderful parties. They were either held at the Riviera Country Club or the Beverly Hills Country Club, and those were spectacular. My daughters still remember those as some of the most memorable things of their childhood, is going to those parties, because they had all the giant shrimp things, and you'd have celebrities there, Liza Minnelli, Neil Diamond. I mean, it was really truly amazing, the type of people that hung around there. But those were the old days, and the old memories leaving. Let's take a look here at the VIX. It's also telling it there's no fear in the market. And as you can see, as it goes up every day, there should be no fear at all, because finally, folks, after 300 years, Isaac Newton's laws of motions have been repealed. Things that go up will not come down if they're related to stocks. I'll be the first to report it here that you will probably never see a period where the Dow Jones is down 2 days in a row at any other time in our lifetime. So let's just remember that, and we'll keep it posted on our little computers to remember that buy any dip, because there will not be another down day in the market 2 days in a row. We might have a down day, but not 2 down days in a row. And I'm not saying that with tongue in cheek. I'm saying that could actually happen. The odds of it are against you, but that's neither here nor there. Okay, now so we have a question coming in from somebody. No, I don't know if the stock market is taking medication or not, but it certainly appears to be it certainly appears to be doing that. So we'll watch it with a little bit of trepidation here as we see it head up to the 2270 level in the S&P 500. I frankly don't believe that we're going to see anything with the a movement in the, let's just look at it, at 20,000. I really don't believe. How close did we come to 20,000 today, folks? Did we get there yet? Woo, we're close. We're only 25 points away. That's pretty good. 877-927-6648. Wow.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we are very, very close to Dow 20,000. If we take a look here at this long-term weekly chart on the S&P 500, you'll notice that up at this level here, we are also at the 1.618 expansion on the weekly. As you can see, that is also an ABCD pattern that is completing. So I think that has some a little bit of importance. And finally, if we take a look here at the Dow Jones as we approach the 20,000 level, you'll notice that we are also in a 1.618 expansion. And that is because you don't see the down move that happened election night with the Dow down over 800 points on election night. we actually turned that around and had a little bit of a rally since November 8th, like nothing we've seen before. So, well, at least we haven't in our lifetime. Other people might have had that are a little bit older. But we are over a major Bradley date in here, so we'll see. Remember, we are in a period where Mercury is going retrograde. It turns and goes direct on January 8th. That happens to be the birthday of the king from Tupelo, Mississippi, Elvis Aaron Presley, which we will celebrate that with a day off for everybody this year if we can get it passed through Congress quickly enough. So keep in mind that what goes up must come down, maybe not in our lifetime, but we'll be able to see. Yes, we did hit a major bottom, I believe, in the wheat today at $4 a bushel. That was a ABCD correction. Setting right at a 78% retracement, so that should be really strong support in the wheat. I know we rallied about 6 cents off that bottom, but it's going to be really interesting. Remember, these are thin markets, folks. There's a lot of people that are not doing very much this week, and so watch it very, very closely. I'll mention I don't think 20,000 means that much, but you know I'm wrong a lot, so keep that in mind also. So we'll watch that very, very closely. Yeah, we do need a new holiday to celebrate Elvis. Maybe we could put him on a $20 bill. Merry Christmas, everyone. We'll see you tomorrow.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.